The L1 market structure long term is not necessarily clear. Will it be one, or will it be a handful, or will it be many? We're in the camp that is probably more like a few, if not a couple, than many. These smart contract platforms do have meaningful network effects that they can build over time. And that is one of the reasons why projects like Ethereum and Solana can continue to compound growth and get these big outcomes, even if there are rising competitors that do offer interesting products in comparison. So I think that's also worth mentioning as well, is that I think in our view, this likely isn't a winner take all market. There could be room for, a handful or, a couple on the throne.
Hey everyone, welcome to Messari's End of Year Thesis podcast. Today I'm joined by Ryan and Wilson from Synchrony, as well as Matt Markowicz, who's our in-house L1 expert at Messari. Today we are going to be talking about a year in review and looking forward to 2025. But first, thanks for hopping on, guys. I don't know if you want to do just a short, quick intro. If not, we can just jump right into it, but I'll leave it up to you.
Yeah, sure. So I'm Ryan, co-founder of Synchrony. Synchrony is a thesis-driven hedge fund that makes high conviction bets on the secular winners of the crypto economy.
Hi, I'm Wilson. I lead research at Synchrony. And before that, spent a good amount of my career at Messari. So happy to be back.
Messari reunion.
Awesome. So obviously the topic of the pod today is Solana. But before we kind of dive into the year that Solana's had, I want to start a little higher level and just think about how we're valuing L1s or how you guys are looking at L1s. So trying to think of examples, but should we still be using like TVL as a metric? Is it just about users? Should we continue to be comping L1 valuations to Ethereum? I guess higher level, when you're approaching an L1 decision, how are you thinking through that a little bit?
Yeah, so happy to start here first. There's both theory and practice. And I think I'll lean more into the practice at first. In practice, many of these blockchains are valued on a relative basis, and that is how they trade, and that is how people, I think about the valuations. Now, what is the history of this, and why is this the case? The first smart contract platform, Ethereum, started off as a proof of work cryptocurrency. It didn't have any fees. There was no stakers that accrued any revenue. It was, just like Bitcoin, except the difference is that you could build more complex applications on Ethereum because it supported smart contracts. And that, I think, is where that relative valuation framework was birthed through Ethereum and its relationship to Bitcoin. Now, what's changed in the years since really like the merge is that now you have these proof of stake blockchains inclusive of Ethereum, and these fees can accrue to you as a staker. One thing that is worth mentioning, though, is that these fees are accrued in a asset that you self-issue. It's a unbacked self-issued currency that you are collecting these fees in. So it's very awkward. And that's why there is no common agreement on whether we should be valuing these as equity-like assets or currency-like assets. I think for me personally, I've always been in more currency camp. It is definitely, it's not something that is necessarily measurable, which is why I think it's hard for many people to stomach that we're just going to say all these are currencies. I mean, there's a chance that literally none of them are currencies, and that'd be a totally reasonable outcome as well. But that is how it's been done in practice. And to me, that is what makes the most sense in theory.
I think one of the things we had talked about internally is how if you start to value these assets based on their cash flows, which again is a circular economy because you're earning in the asset that you're issuing, the valuations don't really make sense. They trade at such large multiples that it's like, how can you actually justify this valuation when you're like trying to value it as an equity? And can they really grow into this, especially as you start to look at down the line other ways in which, whether it be applications or other components within the stack, particularly like, for instance, MEV, that you may start to see less and less of that revenue actually accrue down to the bottom layer. And with all these forces at hand, it leads you like to the conclusion that a large portion of these valuations are driven by its value as, or how people perceive it as a monetary asset. Whether that's correct or not, we'll definitely see. I think for some assets, it's more believable than most because it's definitely more of like a social movement than one that's purely based off of its financial activity, as we've seen with Bitcoin. It's pretty clear that and so we're joking about how like the original sin for Ethereum was everyone talking about, oh, look at all these cash flows to ETH and the stakers, and look at revenue ramping up. And it's like, this is why ETH should eventually be more valuable than Bitcoin. And then as soon as the tide turned at the end of the last cycle, all that revenue kind of went away. And it's like, okay, now we want to lean more into being this hard money asset. So all to say that you want to look at these different qualities in aggregate. Yeah, they earn fees on various sources. You can see as like a demand for security as well. But in the end, the majority of that valuation is going to come from how people perceive it as some sort of store of value.
And I think a quick follow-up here, because you did mention metrics like TVL and how useful are these in valuing blockchains or measuring their competitiveness. And it's a mosaic at the end of the day. There is no one metric you can use to assess the competitiveness of one smart contract platform for another, which is the same case as, any like economic entity in the world. You need to use multiple measures and KPIs to assess the competitiveness. And I think for us, you really just want to be looking at activity to see how that is trending versus other blockchains. And there's plenty of ways you can measure this, whether it be fees, transactions. You can just kind of go down the list. There's so many ways to kind of stack it up, and that'll tell you. I think what's very important if we are going to start or continue to value these assets as money-like assets is you really need to see activity that is driving demand for that base asset as the money in the ecosystem. And what does that mean? It needs to be the dominant liquidity pair in all the exchanges. It needs to be the dominant collateral in DeFi, right? It needs to be used as gas, hopefully on the base layer, and then hopefully on ropes as well. And that's how you can start to buy into this thesis that this is going to be this money-like asset within this ecosystem. Because if it doesn't have that, then, I don't know, what is the purpose of this thing? It's just sitting there, no one's using it. And it's like this unbacked self-issued currency. It's kind of floating around.
Again, that was like a common theme. It all comes back to what's the demand for the network. And yeah, and like unsurprising, like that's what's driving the activity. And that all comes down to what is the application ecosystem like and how are people using it from there. And I like agree on activity. And then it's also interesting how we see some differences in stuff. Like I think TVL is the most apparent one, where Solana is clearly growing relative to Ethereum and beating it on several key metrics related to trading activity, token creation, volumes, trading volumes. And then, but you still have Ethereum leading and stuff like TVL. And it kind of goes into like, how are people actually using these platforms? And it almost like we were categorizing it as like Ethereum is more like a stock-based chain, as people are storing a lot of their value in these assets on the network, whereas Solana is far more active and is almost looking at like the flow-based chain as like the main network that people want to use and interact with. So the core premise is you need to have people using the platform and the core asset being used as the core collateral within the network, and that just leads people to want to hold and use it and view it as a store of value. And then from there, we can start to see differences in how people are actually interacting with the network. And that's not necessarily a bad thing. It's just how things are different and how things can play out in this really like multi-chain ecosystem.
That makes a lot of sense. I have so many follow-up questions. I feel like we could do this for 2 hours, but I think we unfortunately have to move on to some Solana specific things. So at least in my head, 2024 was kind of the year of markets pricing in Solana's potential to become a leading L1. And I think that was a lot to do with the thesis that you guys put out. So I have a two-part question here. The first is, do you see that thesis as primarily playing out? So does Solana feel like at a relative valuation correct compared to peers? If not, we'll just leave it at that. And then the second half of that question, or the second part of this question is, was there anything that happened this year, mainly on the infra side that made you rethink Solana's potential in terms of like maybe, I don't know, token extensions? Wow, this unlocks a whole new use case. The potential TAM of this L1 is actually way bigger than we thought at the start of the year. So just those two things. Would love to hear your thoughts.
Yeah. So the original thesis that we released at the end of 2023, and I guess the original thesis when we were underwriting it in summer of 2023, was really about Solana's potential, because at that time there was no activity happening there, at least not any that is anything to get excited about, right? So you were really looking at, one, how did it stack up technically compared to other blockchains that were live? And then two, what was the developer ecosystem like? Because during that time, the narrative for Solana was that, one, all the developers were leaving. Two, it would never generate any fees because the fees were too low. And three, there was no one doing anything on the chain. So you really had to be making a bet that all those three things could change, and what would lead to those changing. And for us, it was doing that technical diligence and figuring out that while there's this common sense that Solana is achieving this high throughput and low latency by jacking up their validator hardware requirements, what we found is that that is a partial truth, but the partial truth that is actually more important is that Solana has network level innovations as far as how it propagates data around the system, as well as parallel execution. And these could lead to higher performance per dollar invested in hardware than Ethereum. And if we were to go back into a more speculative phase in the market, because once again, back in June 2023, that was, things were dead. It was depressing back then how depressed prices were in activity. But the thinking was that if we were to go back into an environment, honestly, like today, this would be the most logical place where people would want to speculate and trade meme coins, create new projects, experiment. And that was the thesis at the time. Now, what has changed since then is that we've seen this really start to play out. Solana now rivals Ethereum in activity across many KPIs, and in fact surpasses it. It is now home to a ton of grassroots experimentation, which was not necessarily the case early on. It was mainly venture-backed projects that were building, but now, for example, more recently, you start to see the AI agent experimentation happening on Solana. It has the most projects in that sector that are launching on it, and the market capitalization of all those projects is actually the highest of all blockchains as well. So you're really starting to see that thesis continue to play out from here. And as far as has the thesis fully played out? I think in my eyes, no. It's definitely a lot closer now that it's no longer 5% of Ethereum's market capitalization. It's now 30%. But I do think that this still has some ways to go and eventually should reflect a more peer-like relationship. And what does peer-like relationship mean? It doesn't mean that Solana just surpasses it and then Ethereum's dead. That's certainly not the case that we're making. It's more so that these should trade closer in line to each other to reflect the fact that they are actually rivals and they're equaling each other in activity and institutional mindshare and all these different things you use to validate a smart contract platform.
I think just to expand on that a little bit, I think what people are like, what the market generally looks at when they're looking at the data is trading volumes going up on Ethereum, on Solana, starting to rival Ethereum's. And a lot of it is still built around the DeFi ecosystem and drawing parallels there. And I think what does tend to be a little bit underrated, overlooked, is the diversity of applications that are spinning up on Solana, and that Solana tends to be one of the leading chains supporting these sectors. So sectors like DePIN and more recently agents. And these are potentially, at least particularly with DePIN, applications that aren't as reliant on the cyclicality of the crypto markets, whereas DeFi completely related to how much on-chain activity is happening. DePIN, they have all their integrations with the real world and have revenue sources that are not as tied to on-chain activity. And you can say the same in many cases, potentially for AI agents, depending on where they go. If they end up being influencers, and you start to see a bunch of AI musicians bringing revenue that way, then you start to see that you have this diverse ecosystem that can have activity and are creating value for users outside of what's going on in crypto DeFi markets. So I think that's what people tend to overlook a little bit, is because everything is so derived from, hey, what is going on with trading activity? And we're not projecting out where this could go out and in other sectors that crypto really hasn't tapped into in a wide way yet. Oh, and I guess the second part of your question, the technical advancements. So I think one thing that's been beautiful about Solana is it seems like the roadmap itself, or the end goals, have been pretty much the same since its founding. And it was all, I know it's more of a recent meme, like increased bandwidth, reduced latency, but it has always been a chain based on, hey, we're gonna the core premise of building out this network is going to be centered around the advancement of hardware. And so that's been core to the thesis the entire time. And every change that they've implemented has really been built off of that. And so it really didn't come as a surprise. It was like, let's increase scalability or throughput to, for what we can right now. They run into an issue. There's some congestion. We'll make some changes, make it better, and look at different ways to continue improving upon and building up the same model that we have. So you saw earlier this year, they made improvements to the fee market, making their parallel execution more efficient. And that's only going to continue to improve there. So I don't know if there was like a huge unlock. I know there are a ton of very cool new, I wouldn't say like network level changes, but I like cool new features introduced to the network, whether it be like network extensions, ZK compression, that can help out with the application ecosystem, helping lowering like storage costs, or expanding out what you could potentially do with your application. But I think those are all part of like the natural progression. It wasn't something like that was a huge unlock there. I will say that I do think that there's some like technical advantages that Solana has in some ways. For instance, when it comes to like AI agents, Solana has program-derived addresses, which is where like a program can run an account natively on Solana. So you don't need this active multi-sig to launch like a somewhat more fully autonomous agent on chain. So it makes it better suited for some of these other applications just natively. And I think that's where a lot of the advancement is going to come from, which is when applications start looking at where am I going to launch. It's not only the support that you get from the teams, it's also what is actually available there in terms of performance and technical capabilities. And Solana just has some of these advantages right now that can help out with that.
Awesome. So it's not so much that like the goalposts have moved, but all the updates that we have, basically everything about the last year is signaling we're marching pretty steadily towards those goalposts. Sounds like a good summary. I kind of want to call back to talking about different metrics where Solana is starting to rival Ethereum. Trying to think exactly how to frame it. But I think specifically you look at fees, and the vast majority of those fees right now in Solana are driven by meme coins. I think I looked, it was like 60%. So it feels like we can't have a Solana thesis without having some view on the impact of memes. So I think there's a couple ways you could frame it. You could say, okay, memes are stress testing the network. You could say memes are here forever. You could say there's customer risk and you could fund Solana based on memes. I don't think that's what we're going to do today. But I'm just curious, does the adoption of memes affect your thesis at all? I guess is kind of what I'm trying to get at.
Sure. So I think memes have been a great tailwind for Solana. Undoubtedly, over the past year, it's caused usage to skyrocket and it's brought a ton of attention to the ecosystem. And while Wilson laid out the technical reasons why a lot of these AI agent projects, for example, are launching on Solana recently, another reason why they're launching on Solana is because it's just where they can get distribution. And Pump is the best platform to do that if you are one of these new projects that's once getting attention. That being said, I think for me, the meme coins, basically at the end of the day, block space will be filled by people who are willing to pay for it. And in a bull market, the people who are most willing to pay for it are the people who are probably speculating on chain. This is the same exact behavior we've observed throughout the entire history of the on-chain economy. Back in DeFi summer and then during 2021 on Ethereum, Binance Smart Chain, every single chain that was in existence, you had people just running up the fees and flooding block space with a bunch of nonsense. Like quite frankly, DeFi summer, while we all remember it as this amazing period where people were experimenting and there's all this cool stuff, like DeFi was finally working. It was also a time of just an incredible amount of speculation. I mean, there was so much nonsense that was launched. I mean, people forking Uniswap a million times and then attaching some kind of governance token that was named after a food. I mean, it was so ridiculous, and that's really what people are doing. So is it really surprising that people are doing something similar on Solana and in trading, meme coins and speculating? I don't think that's the case. But what I will say is that I would be concerned if this was the only thing happening in the Solana ecosystem and it was just a meme coin trading chain. But when we talk about some of these other sectors that we mentioned before, that's where we start to get excited. So I think one of the things that really excites me about Solana is that while I think most blockchains do have this circular DeFi economy of people borrowing and lending and trading the same assets on chain over and over and over again. What's interesting about Solana is it has traction in sectors like DePIN that have the potential to transcend the circularity of the crypto economy. And it is by far the leader in DePIN when you look at both the number of projects, the market capitalization of the projects, and then the traction of many of the projects. I mean, you have a handful that are contracting with Fortune 500 enterprises like Helium, for example, where they have three of the top four major wireless carriers in the United States that are using the network. I mean, this is truly incredible stuff. And that's only going to compound over time as these on-chain businesses continue to grow and as new businesses are launched on Solana. So I think that's really what excites me as we kind of look forward to the future is more of these, maybe sustainable is not necessarily the right word, but these, more fundamental use cases for this technology.
Yeah, I don't have much to add. I think the only thing I'll say is that the meme coin mania happening on Solana is just a sign that Solana has been the core chain being used as the latest consumer phenomenon within crypto. And whenever you see some of these consumer phenomenons, it leads to a massive amount of new tokens being created. And I think that's just part of the experimentation phase. And it's just a matter of when people are thinking, hey, I want to launch my project, I want to have a token associated with it. I'm going to want to go to where the users already are and where I can get activity. And so that's pretty much where you have this flywheel effect where developers want to continue launching tokens on Solana and then users continue, that therefore brings in new users, and then you can see how that takes off. And I think the other thing to also consider is, Pump has been really the basis of this meme coin debauchery, but at the same time, it's kind of like this new, in a way, fair launch platform where I want to go and launch my token in a way that is like somewhat incredibly fair. And I think Tushar from Multicoin talked about this previously, where it's every new cycle is often defined by a new form of capital formation. Whereas we saw liquidity mining in 2021, ICOs in 2017, you could almost view like Pump Fund fair launches as this cycle's version of that. And so now you're starting to see not just meme coins launching on Pump Fund, but actual legitimate projects going about it in that way. So which is encouraging in that like this is headed in a direction where you can start to see more and more credible founders, credible projects actually launch tokens through this mechanism.
I love that framing of like the speculation bootstraps the other use cases. I feel like a lot of times people just point to, like DePIN's coming, AI is coming, but kind of connecting that link of maybe part of the reason they're coming is because of the users and the liquidity that's being amassed from memes. So I really like that. Slight pivot here. I want to talk a little bit about competitors. So I think last year, Solana was the undoubted leader in terms of mindshare as a high throughput execution environment. I feel like in 2025, we're going to start seeing more people see Solana's success and try to come in and potentially steal some share. I imagine like a rising tide lifts all boats, but maybe the incremental dollar that would have gone straight to Solana might go Hyperliquid, Base, maybe Monad. I'm curious, how are you thinking of competitors? Do you think that Solana has amassed a moat that can keep them away? Or are there certain dimensions that another execution environment can come in and provide some real competition?
Yeah, that's a good question. So I think we continue to be bullish on Solana and think it's escape velocity, much in the way that Ethereum has. And activity on Solana will continue to compound over time. And like you said, there are rising competitors that may steal mindshare and even some activity on the margins from Solana as well. And one of them that you mentioned, I think is most notable, is Hyperliquid. The way I think about Hyperliquid right now is it is a competitor to Solana in the long term, but in the short term, I just think of it more as a competitor to centralized exchanges. And the way to think about it is that while all other smart contract platforms start with a technical problem they're trying to solve, right? Ethereum's like, oh, well, Bitcoin sucks because you can't build anything on it. Let's introduce smart contracts. Solana's like, all right, cool. Well, none of these blockchains scale. Let's introduce parallel execution and better way of propagating data, and then maybe we can build NASDAQ on chain, right? And that's kind of like the guiding light for these L1s. Whereas with Hyperliquid, it didn't start with wanting to solve any technical problem at all. It actually started with wanting to build a specific product, which is we want to build a better exchange objectively, right? Not a better decentralized exchange, but a better exchange. And then you work back from there. So at first, to build this better exchange, you start with 4 servers co-located in Tokyo, and that's only be able to get performance that is comparable to a centralized exchange. And you work backwards from there. So you think about over time, you want to decentralize this validator set from 4 that are co-located and run by the team to dozens that are run all over the world by independent parties. You start thinking about open sourcing the code base and allowing anyone to contribute to it, enabling smart contracts so that anyone can build an application on Hyperliquid and provide access to it to Hyperliquid users. And that's how you build this better exchange. Now, who I think is a threat to in the near term, I don't think this is a threat to Solana. This is an entirely different product. This is a threat to the centralized exchanges because it is beating these exchanges on being able to service a truly global audience. It's partially regulatory arbitrage, but it is a matter of fact. It is beating it on product development by tapping into some of these more crypto native primitives. And that is what is exciting about it. Now, long term, inevitably, these are on a collision course, right? Because you start by being a crypto to crypto exchange. Like I said, this is even something Binance, I think, has seen for a long time as well. And why they even started Binance Smart Chain is what does Binance do? It's mainly just crypto to crypto. Crypto to crypto exchange long term is probably going to be done fully on chain. There's no reason why you need to custody these assets in a centralized manner when you have these blockchains to do this yourself. So that's why Binance created Binance Smart Chain. And I think that Hyperliquid is just doing almost the exact same thing, but it has that last mover advantage where it can see where many of these other exchanges failed and just execute much better. So we will get to a point where we start to, once we see this Hyperliquid EVM ecosystem come to life, where we can start to entertain the idea that this is a competitor to Ethereum and Solana and all these other people in the world. But that is just, I think, a little bit far away right now to really entertain because it's just not the same system. This is not the same system.
Ryan talked about it. And when we look at these L1s and assess them, or these new up and coming burgeoning ecosystems and how they fit within the larger crypto economy, we look at, do these networks, how are they differentiated? And does that point of differentiation bring an order of magnitude improvement in performance? And what I mean by performance is not only just throughput, but could be for a particular application. It could be an economic improvement in some way by improving liquidity. And does that not only that 10x or that order of magnitude improvement in performance, does it also expand the design space for applications? And those are some of the key features that you saw with the advancements of Ethereum and then Solana. And now you're starting to see a few pop up along the way. And Ryan laid out the case for Hyperliquid there. I mean, it's got the best on-chain exchange out there. And so if other applications want to build and complement with it, and you want to be on the best exchange and have the best execution there, that's where it makes the most sense. When you start to look at some of these other platforms that are out there, they're just kind of replicating what's already there. It's kind of tough to underwrite these networks really stealing meaningful share from networks that were first, because these networks have such strong flywheel effects and moats built around them and their state. What you have to expand from there is like, okay, where does the next order of magnitude improvement come? Obviously, these chains are resource constrained to a degree. Sure, we're trying to advance them significantly, but what chains could then bring the next improvement in throughput from there? And starting to see, maybe it's not a single network, maybe it's multiple networks posting their data to a chain that is able to massively expand block space far beyond what any single network can do, or integrated network can do. And so that's like one of the core thesis behind Celestia from there, is like they can really expand up the block space far beyond what a network with an embedded execution environment can do, while allowing like all its ecosystem of rollups to optimize for that, while it optimizes just for making space available. And so all of a sudden you can start to see where its aggregate TPS across all its rollups can reach hundreds of thousands, if not millions, of transactions per second. So that's when we look at L1s. That's really what we look for. That's the basis there, and then you scale up from there in terms of, okay, how does this expand the design space, and what applications can actually be built here that couldn't be built anywhere else?
Yeah, I think Wilson brought up a great point on how to think about what L1s have this Solana or Ethereum-like potential. And you really do need to be looking for orders of magnitudes improvement across some dimension, whether it be scalability, customizability, whatever it may be. Another thing that I think is worth noting as well is that the L1 market structure long term is not necessarily clear. Will it be one, or will it be a handful, or will it be many? We're in the camp that is probably more like a few, if not a couple, than many. These smart contract platforms do have meaningful network effects that they can build over time. And that is one of the reasons why projects like Ethereum and Solana can continue to compound growth and get these big outcomes, even if there are rising competitors that do offer interesting products in comparison. So I think that's also worth mentioning as well, is that I think in our view, this likely isn't a winner take all market. There could be room for, a handful or, a couple on the throne. And who are those projects that get a seat on the throne? They're probably ones that look very different from each other, right? Because if it looks exactly the same and all you're offering is a 2x improvement over an existing solution, no one's going to care, right? If you're a deep in project building on Solana, and then all of a sudden a smart contract platform that has parallel execution comes along and says we're 2x faster, is that project going to move? Probably not, right? Because why would you want to start from scratch when Solana has all these other applications to compose with? It has all these integrations. It has this track record of running over time. It's more secure. I mean, it really becomes difficult. There's a lot of lock-in for applications as an ecosystem really starts to grow and mature.
I think just to add to that, don't underestimate the amount of block space we may need in the future as more users move on chain, and especially as you start to see bots or agents transact on chain and maybe even make up the bulk of activity that's happening on these networks. And if there's space available and there's demand for the network, that available space is going to get eaten up.
Got it. So really looking for these like 10x, 100x improvements. We're not really seeing a lot of them in the areas where there is improvement. Everything can rise together because they're so differentiated. Am I kind of summarizing that in a way that makes sense? Last question I have, I think we got like 9 minutes. So just want to pivot, look ahead to 2025. Do you have like specific catalysts for Solana that you think can lead to outperformance? And then just for me personally, I kind of like framing this question not so much on the Sol ETH pair, because I feel like there could be ETH underperformance that lead to Solana perceived outperformance. I'm kind of more curious on like, are the catalysts for Solana outperform, like it's stumbling on my words, but basically outperform the entire market on like a volatility adjusted basis, I guess?
I think for me, there's two big catalysts that are clear to me right now. One is the launch of approval and launch of a Solana ETF. Those odds increased substantially since the election, and that is one moat I believe Ethereum had previously, is that it had a regulatory moat in that it was the only asset beyond Bitcoin that seemingly was approved to be available for institutions, and that regulatory moat I think is eroding very quickly since the election. So that's a big one. Easier institutional access to Solana. And then the other big one I think is Firedancer. And Firedancer in a way can be thought of as Solana 2.0, where you get a big order of magnitude improvement in performance. And I think that's very exciting. So those are the two biggest ones. And then there's obviously other ones that are much smaller that could come along as well. But yeah, those are the ones I'm really paying attention to.
Yeah, I mean, those are the two clear, obvious ones. I think in terms of what else can be in the line is like, I think we've talked about this previously. The number of voices that are that are being heard and within the like core Solana developer community is not just people working on the code, but also applications and other like critical infrastructure being built there. And that by having these other voices, by having the applications in the room, being able to say, hey, what can we do to not only improve what our application does, but in order to enhance the overall quality of the network or performance of the network, that enhances the amount of innovation that can happen and experimentation that can lead to other advancements. And I know like one, for instance, is potentially exploring how it can continue to improve the speed of confirmations for Solana transactions because of its role within the network and how critical it is to order flow. And I think from there, you can start to expand out some of these other projects that might be building in that space. Who knows what happens with Light Protocol and its ZK compression and how that factors into the expansion of network extensions or scaling up various use cases within the network. So and a lot of levers being pulled, and I think you're seeing a lot of experimentation within like some of these critical infrastructure projects on Solana. So I like smaller to a degree than the two ones that Ryan was talking about, but I think having these multiple voices within the room definitely helps out in terms of how quickly Solana can continue to advance.
One thing I'll note too is winners have a tendency to surprise the upside. And good example of this is Aave, for example, over the past 3 months. Aave is a leading DeFi protocol on Ethereum, and we all knew this. But what was a big surprise is the president and his sons building a project on top of Aave. And that was a huge catalyst for it that couldn't have been seen in anticipation or before it happened. And I think that's somewhat common in this asset class where or just even in markets more generally, where the leading companies, the leading blockchains in our industry, they really have the winners. They execute, and when they execute, they sometimes just surprise you in ways you couldn't have imagined.
Awesome. I think that's a perfect spot to end. So thanks to you guys for coming on, and I know I learned a lot, and I think people will love it.
Yeah, thanks for having us on. Always nice to have a little Messari reunion.
Exactly. Yeah, thanks, Kinji. This was great.